Hi friends, welcome to this pre-market analysis where we try to find premiums and discounts on the chart. So this is the monthly chart of Nifty. It is showing a bullish bias because this is a low created and this is another low created which is higher than the previous low. So the bias is bullish. Now important levels to look for are the all-time high, which I shall mark in red, and then the previous low that was created in the month of August. I shall mark that in green. So on a monthly time frame, this 26,277 is the discount, and the premium is 24,350 levels. Yeah, and this candle, these two candles together, they act as an order block on a monthly time frame, and if um, if it closes above the mid of this, then it proves to be, then it is proof that this is a bullish order block, and then Nifty could fly higher from here. So let's just mark the mid of this. So that's approximately 25,000. That's a good level to be to beat. Let's say if the monthly candle closes above it, there's the chances, at least at present, chances are low that may close below the 25,000 mark. We had two consecutive candles. That's the August and the September candle that closed below the 25,000 mark, and this is the first attempt at close. This is the first legitimate, at least what looks like a legitimate attempt to close above it. Going quickly to the weekly time frame. The weekly time frame is also bullish. So bullish, and again, the weekly time frame has one candle that looks very much like an order block, and the midpoint of that is also almost that coincides with the midpoint that we marked. The midpoint is the mean price of an order block. So the body of the last red candle in before a bull run, or a green candle before a bear run, is what we should consider an order block, and the body of the candle is where the maximum orders were executed, and the midpoint of that body is the mean of the price of that body. So that's the logic behind drawing the midpoint of that. So now let's look at, so there has been a close above this candle. This candle is the 23rd June candle, and it looks good. Let's see if it takes support here and then moves forward. That's a good place to take support. I'll mark it at 2 pixels just so that I identify there's a weekly support. That's a good place to take support, and then it could move higher from there. Yeah. Now going to the daily time frame. The daily time frame is also indeed bullish, and let's see if there is one level here from far behind that I feel I should mark. That is this one candle. You see, this is the last green candle before this huge fall happened, so it's a good order block. Let's just mark it up. Yeah, and let me just mark it in 1 pixel just to show that it's on a daily time frame. Is it a green or a red candle? Okay, it is a green candle. That's brilliant. Just take a look at that. It closed. There was a gap up opening above this level. It sustained above this level, but it sold off, and it closed. The average closing was above this level, and that level is 25,795, approx 25,800 level. So that will prove to be a very crucial level now. Let's see if it sustains here, or if it comes down, then this is the next level to be looked at. Then there is something called the fair value gap that you can draw. So there is a fair value gap between the top of if you draw a fair value gap, this is how you draw a fair value gap. It's the top of one candle and the bottom of not the next candle but the next one. So this bullish fair value gap also has been tested now. So these are areas of discount. Let's see if it takes off from here tomorrow. Now going to the 4-hour time frame. 4-hour time frame is bullish. There is no lows that has been taken, so 4-hour time frame is also bullish. And the 1-hour time frame, yes, the 1-hour time frame has turned bearish. So if you, I'm just deleting this fair value gap for the time being. Now why has it turned bearish? Because this was the previous low, this has been taken. If it has been taken, when I say taken, even a wick below that is I would consider it's taken. Now this is a high that was created, and from there there's a lower high and another lower high. So there's like 3 consecutive lower highs. So when lower highs start getting created, it's considered bearish. So the hourly candle is bearish. So now if you look at this, the biases and on a lower time frame, and the lowest time frame that I look at, 1 hour, has become bearish. So ideally I may not take any trades because the biases do not align. Most of my, it's just an observation, most of my good trades have been when all the time frames align in a certain direction. And it's okay if I don't take trades in these conditions. And my trades are normally retracement trades. I do not jump into a running wagon. I just wait for it to come back to these levels that I mark, and then from there I take retracement trades. Retracement trades in the direction of the market. So trend is your friend. So that's how I trade. So that's all for today. Thank you.